Let's talk more about this. Hao Hong is managing partner and CIO at Lotus Asset Management and joins me on the set. Very good morning, and it's good to see you. Let's talk about this. As we were running through some of the newcomers to the Hong Kong market, I was noting that you were shaking your head watching some of the big declines that we're seeing in the consumer stock, Long Feng Group today, but also this move by FTSE Russell. This is a recognition of the AI and the tech that is now becoming a bigger part of the Chinese economy.
That's right.
Talk to us more.
Yeah, well, I think better focus on the Chinese index and also the Star 50. These are the indices that is tracking many of the new tech firms, and they're doing exceedingly well. I think, Chinex, for example, has made all-time high this year, and I believe it will continue to make all-time high in the coming future. I think Star 50s, some of the companies start very small, and now they're some of the biggest companies are actually listed on the Star 50 index as well. So I would say that the AI story is going to continue, because the AI capex spending is still accelerating, and the momentum is spilling over to the other related sectors as well. So I would say that the AI story is still the story of the day.
Yeah, as we were watching Computex, I wasn't expecting any Chinese companies to appear, but lo and behold, when Jensen was on stage, the reference robotics company, Unitree, this is the company that they chose to demonstrate. I'm not going to go into the lingo, and I forgot the name of the chip anyways, but yeah, that's right. Groot, I think, was the technology in the robotics stock. But Unitree here is looking for an IPO on the mainland. I want to get your take on this momentum that we're seeing in China. So they're not the only one. There's Minimax, there's Zhipu AI, also known as Knowledge Atlas, that are looking for A-share IPOs, also after having listed in Hong Kong not so long ago.
Yeah, I think many years ago, there were a whole bunch of Chinese firms come back to Asia market for relisting, and all of them have done exceedingly well. Because people know that the Asia market is more speculative, and therefore investors there are more willing to put on a higher valuation multiple for these names. So I think also in terms of AI, I think the Asia market has a lot of semiconductor names that tends to be at the upstream of the AI supply chain. I think right now, if Zhipu and Minimax going back, they would be, probably the only two AI large language model companies that will be listed in Asia. And I'm pretty sure that they'll be well received by the mainland investors, because they're just dying for investment opportunities such as this. So I think, relisting at this time of the year is good, because the stock market is buoyant. And it's easy to get valuation and also, very large subscription for your IPO as well. So I think, given all that, it's not a huge surprise that, these companies wants to go back to the Asia market.
What is your take on the short time frame between the H and then the A share listing? What does that tell you? And also, what trends are you seeing on the AH premium?
Yeah, I think Zhipu, for example, has risen like 1,200%, 12 times, right? Which is in a very short time span, right? It's a spectacular performance. So I think capturing this kind of valuation momentum to raise money in this bull market is good for the management, so that they can have money to spend for R&D. So I think we're probably going to see more and more such move from the tech companies moving from Hong Kong and to be dual listed in the Asia market as well. In terms of the A&H premium this year, it's shrunk dramatically. I think ever since late 2024, the premium has plunged to a level that we haven't seen for a couple of years now. Historically, it tends to be a measure that the Asia market is not doing as well as the Hong Kong market. But I think this incidence happening right now is actually an indication that how the mainland Chinese money is flooding to Hong Kong to be trading here. So if you look at the mainland flow as a percentage of Hong Kong trading volume, It's about 20-25% right now, and it will continue to rise, because the Connect scheme will be expanded in the near future as well. So I would say that it's because of the mainland, the move of the mainland money in the Hong Kong market that is driving down the A&H premium.
In terms of those flows, how much of that is the regulatory crackdown on cross-border securities trading? We've seen some of the financials, the banks here in Hong Kong, they've had to be a bit more mindful of opening accounts, and we've seen some downside come through in HSBC, Stanchart, AIA shares. If we could pull up those stocks, I take note that there's been quite a bit of weakness in recent sessions, also in the London-listed shares. Would this regulatory crackdown be a boost to the Hong Kong market?
I think in the near term, it could be, slowing the money flow coming from mainland. I think today's move, we've seen some pretty big move in the insurance sector, for example, because a lot of mainland money came down to Hong Kong to buy insurance products. And I think ever since last year, all the insurance agents are going banana, and a lot of, people working in the finance industry actually move over to the insurance industry and start selling insurance contracts to mainland Chinese clients. But you have to think, how did all this money come to Hong Kong, right? So it has to come through, I don't know, money laundering, underground channels and all that. So right now, they're putting a stop to opening a bank account, right? So then, for a mainland Chinese client who wants to buy Hong Kong insurance product, may have to find some other ways to move money across the border. And also in terms of the Futu and also Tiger brokerage, I think the move is really trying to stem the illegal cross-border flow. Because if you don't control the cross-border capital flow, then you lose control on the currency and also lose control on the monetary policy as well. So, at this juncture, because the global central bank is at a critical juncture, inflation expectation is rising, and yet, the currency continues to depreciate, and you want to keep the interest rate reasonably low to prop up the market and also stabilize the economy, et cetera, et cetera. I think the PBOC is facing a very similar sort of a dilemma. So I think at this time of the year, we want to rein in cross-border capital flow, and also force the capital to go through the regulated channel to Hong Kong, for example, this Connect scheme, and also the QDII program. And that way, it's actually, better for the authority to maintain control on monetary policy and currency.
As we talk about offshore investment, I also have to ask you about SpaceX, because I'm reading here that it's a June 12th expected listing. And with this, it would make potentially Elon Musk the world's first trillionaire. That's an incredible move. We're going to be watching this history in the making. But in terms of this blockbuster IPO coming at a time when U.S. markets are trading at record levels, does this signal a top?
Yeah, I think a lot of people, were saying, because the amount of money that is being raised is like, 75 billion US dollars. And then on the other hand, Google is raising another 85 billion US dollars. So there's a substantial amount of money that is being diverged from the market. But, if you look at the cash pile that Warren Buffett has been hoarding, right? So he has like 400 billion US dollars on the balance sheet. So that's more than enough for a couple of SpaceX IPOs. So I would say that, yeah, the concern is valid, because in the months of April and May, the US market has risen so fast and so rapidly. So, probably it's time for a breather, and also, such a sizable IPO could be a reasonable excuse, for people to sort of, take some profits off the table and go fishing. So I think a lot of things can happen, but to us, because the liquidity condition is still very strong in the US, and also fundamental is exceedingly strong, because the AI capex is actually spilling over to other sectors. For example, a couple of days ago, we've seen the US job report is very strong. Also, the US consumer expectation for the market in the next 12 months is also at all-time high as well. So people are buoyant, people are very optimistic for the future. And I think, the spillover of the wealth effect from the stock market, to other sectors is palpable. So I would say that, given all that, it's hard to say, this is the top of the market. And I think it has some mileage to go from here.
All right, still mileage to go. Hao Hong, thank you very much for your insights today. We've been speaking with Hao Hong from Lotus Asset Management. Blackstone has capped withdrawal